Good evening, traders. It is Wednesday evening, April 22nd, and that must mean that it's time for our weekly swing trading video. As always, let's start with the market and see what's going on. When the market closes very near its open, that's called a doji formation, and we get a tiny bodied candle like this. Doji, 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 doji. Market has gone absolutely nowhere in the last 2 weeks. What does that tell us from a trading standpoint? It tells us that we need to be very, very careful because that is an equilibrium. That means that buyers and sellers are paired off at this level. Asset managers really aren't doing a whole lot. From a day trading standpoint, we know that the intraday ranges are going to be pretty compressed. So we've got to be careful. There are times when we could spread our wings, and there are times when we need to be cautious. That's what you're paying me for, to know when those moments are hitting up. And right now, we need to be cautious. So this week, we're going to try and get some spreads off, but we're going to play it relatively safe. Asset managers are waiting for earnings season to play out. They're waiting to see if the economic stimulus package is going to work. They're going to see if the states are going to extend the lockdown or open their economies up. They want to see the speed with which that recovery happens. They want to see if consumers are going to start spending money again. I believe that this process is going to take a long time. From a technical standpoint, if we take a look at the high and the low, there's roughly about a 120 point range between the high and the low on the SPY. So half of that would be somewhere around 60 points. If you take 220 and add 60 points to it, you get to 280. Guess where we're at? Right around that 280 level. So we are halfway in this range. And that's why you see candles like this. The market doesn't know where it wants to go. If we happen to get some monster numbers from Facebook, Google, Amazon, Microsoft, maybe we try, on an intraday basis, try and get up to 300. I just don't see it happening. I think that resistance is going to continue to build here, and I think that the recovery process is going to take longer than expected. And I think that you're going to have some possible credit scares. You look at the energy industry, that is simply one industry that has been completely destroyed by what's going on with the shutdown. So you're going to see that in retail, industrials, travel and entertainment industries, all across the board, the housing industry. So I think that we've got some pretty tough sledding ahead. So let's take a look at how we did last week. The bottom line is this week, I'm looking to try and do some bearish call spreads, and we're going to do a bullish put spread or two, but we're going to try and be relatively passive. So you can see here that we had our trades from last week, April 14th. I think we had a chance to get the DE spread done. And we're trying to sell the May 1st, 150, 250, 155 credit spread for 50 cents. And we had a big rally in here and another rally in here that took us to 140 on the stock. I asked if anyone was working it in the chat room, and they said no. If you got filled, please let me know. I think that 50-cent credit was there, but we're going to try that one again this week. You'll see in a few minutes. Disney was one spread that we were able to get off, so that spread is in nice shape. You can see how the stock has continued to drift lower. Really like that one. The rest we weren't able to fill on. So what I'm going to do, first of all, is some housekeeping. I'm going to click trade, and I actually have to do this as admin, but I'll show you all the trades that we had from the 15th last week, with the exception of the Disney trade, are going to be removed. So I'm going to cancel all of those after this video, and they'll be removed from the staged order screen. But this is also where you can see the trades that we're going to be trying to enter this week. So we're going to go through the trades. I think I want to keep this moving very quickly. We're going to go through the trades first. Then I'm going to show you a couple of searches that you need to be using right now on a daily basis to find your opportunities. So lots of swing trading opportunities. In 5 or 10 minutes, you can do incredible after hours swing trading analysis. So let's take a look at the picks this week, I'm going to click on the list here and we're going to go to April 22nd and we're going to go right to DE. Why do I like John Deere as a bearish call spread so much? Well, as I mentioned last week, I think that farmers are going to hold off on purchasing new equipment right now. They don't know what the future holds for them. So I think that DE is going to struggle. You can see here that we've got that resistance at the 152 level. So what we're going to do is we're going to try and sell an out of the money bearish call spread. The stock has also had some relative weakness. I'm looking for that resistance level to hold. So go into the May 8th option expiration and we're going to go down. This is a week later than we tried last week. I'm hoping that the extra time gives us another opportunity. We just need one little pop in the stock and we should be able to get filled on this. And so the trade will be to sell the 152.50 calls May 8 and to buy the 155 calls. There's a $2.50 difference in the strike prices, so we want to get a 50-cent credit for this. That gives us a 25% return on the spread. I like it. I think it works well. If you hover over the E, you can see that the earnings announcement date is 5/15. These expire 5/8. We always want to make sure that our credit spreads expire before the earnings announcement. So we want expiration before earnings announcement. If you're buying options, it's exactly the opposite. You always want to buy past the earnings announcement date because those options will retain their implied volatility much, much better. So that's just something that you want to keep in mind. DE couldn't get filled last week. I do want to try again. By the way, all of these orders will be good until the next week's video. And at that time, we will cancel our orders unless I specify otherwise. If we're doing some very, very short-term trades, then you have to get in that next morning. So I'm going to go down to the next pick, KO. Really like this one. I highlighted this a couple of days ago in a video. Weren't able to get filled, but we're going to try and do this again. You can see earnings right here. CocaCola said that volumes were down 25% so far in the month of April. The stock is really struggling to hold its own. If we get any market weakness, I believe the stock will drop. And you can see this horizontal resistance line right here that goes right through the $50 price. If the stock were able to get above that, it would fill in this little gap right here. But for right now, that is resistance. 1, 2 tests. And we're seeing the stock pull back. It is weak relative to the market. We can also put up that 1 OSI indicator, and you'll see the orange line is below zero. Perfect. That's exactly what we want. So if I put up the trade here, we can see, actually, I want to make sure that I've got the right expiration. We're going to go into the May 8 expiration. So we're going to click May 8, and we're going to be looking to sell the $50 call. So we'll click on the bid, and we're going to be buying the $51 call. And already you should know that because we have $1 between the strike prices, we'll be looking to bring in a 20-cent credit. That gives us our 25% return. So you can see here that the stock is starting to drift lower, but all we need is one good little pop and we'll be able to get filled on this trade. So that's the trade. We're going to be selling the $50 call and we're going to be buying the $51 call, and we're going to be doing that for a 20-cent credit. We're after earnings, so we don't have to worry about earnings at all. And over the course of the next 2 or 3 weeks, we're going to be focusing almost extensively on post earnings plays. So that's the second trade. PayPal. Really like PayPal. You can see that it got through the 100-day and 200-day moving average, and that's lending support to the stock right now. Really big day today. Long green candle closing on its high. I like this support level right here. So we want to see if we can sell a PayPal bullish put spread keying off of this 108 level. So I'm going to go into the staged order screen where we've got our orders set up already. And we can see PayPal, we're going to be selling the May 1st expiration 107 put and buying the 106 put. So let's go in and take a look at that. May 1st expiration. So we've only got a week and a half for this one. And because we've got such a short time frame, when you scroll through the option chain, you can see here that the red dotted line is one standard deviation and the pink line is the 200-day moving average. So always best to be below these support levels when we're selling bullish put spreads. So I'm going to click on the 107 put, click the ask on the 106 put, and because we have $1 between the strike prices, we want to get a 20-cent credit for this. So to recap, we're going to be selling a bullish put spread below this major technical support. We're expecting PayPal to hold up well. You can see that it announces earnings on May 6th. So May 1st expires before the earnings announcement. So we want to sell the 107 put, buy the 106 put, do that for a 20-cent credit. So I like that. PayPal doesn't really have a lot of risk exposure to credit because they process transactions. And I think that the transactions online have probably been very, very good over the course of the last month. It's the in-store retail businesses that are really hurting. So I think PayPal will be fine in terms of processing transactions. We're going to take advantage of that major support here and the strength in the stock. Again, this is only a week and a half trade. You know what? I don't think that that credit is there, so I'm going to lower the credit that we're looking to get. Instead of 20 cents, we're going to try and get 15 cents. So change that to a 15 cent, 15-cent credit, selling the 107 puts, buying the 106 puts. So please make that adjustment. ROST. What are we going to do with this stock? Now, this is an interesting situation. If I take a look at retail, Ross Stores has a lot of standalone buildings, but they're also in a lot of malls. And these stores have been absolutely closed down for business. How quickly they reopen, that has yet to be seen, but they've got a tremendous amount of overhead. And I think these stores are really going to struggle. So how do I play this? I mean, these stocks have pretty wide option bid-ask spreads. If I look at this as a binary event, then I need to get pretty close to a 50-50 credit on this type of trade. So that means that if I were doing a 5-point spread, $5 between the strike prices, then I'd need to be able to generate a $2.50 credit. So let's take a look at the options here, see what we can get done. And now we notice, well, hey, I've only got a couple of things that I can select from here. They don't have weekly options on Ross. So I'm going to go down and I'm going to see that right at the money. And this is a tactic that I use when the options are all funky. I look at what's at the money. Now, if the stock is at the money, it's got an equal chance of going up or going down. And an at the money spread should be trading pretty dang close to that 50-50 level. So if it's $1 between the strike prices, then I look to get a 50-cent credit. Now I know the market makers will never give me those odds, but maybe I can get it done for a 48-cent credit or a 47-cent credit. That's how I play those types of situations, and I see us doing the exact same thing with Ross Stores. So if you ask me, Pete, what do you think the likelihood is that Ross Stores is going to be trading below $85 between now and that May 15th expiration? I would say I think the stock's going to fall. I think the market's going to hit a rough patch. I think we're going to see the stock pull back because it's a retailer and consumers are not going to go rushing out to shop. So that's the premise behind the trade. You can see a lot of compression up here. So we are about $1 out of the money on that 85 strike price. So we know that they're not going to give us $2.50 credit on this. That just will not happen. They will not do that trade. Can we get 240 for it? Pretty unlikely given that the stock is $1 out of the money. So what can we reasonably get for this? Well, we're going to put our price out there. If we get filled on it, we get filled on it. If we don't get filled on it, we're going to take a pass. So I'm going to go in and click this. So that would be the $85 call that we're selling. And I'm looking to buy the $90 call. And you'll see the market on that is 170 bid, offered at 265. We need to be in there for around $2.25. If I can get $2.25 for this spread, I'd feel pretty dang good about it. If the stock rallied up to, say, $85, so we're right at the money on the short strike, yeah, I think we're probably going to get that credit done for 225, maybe even 230. But we're going to use 225, $2.25 as the credit that we want to get for it. I'm looking that in the course of the next month, this stock is trading below $85. I think it could be down, who knows, maybe to the $75 level. We're going to be generating a really nice return on this, somewhere in the 80 to 85% range. So really nice risk reward on this. Yes, we're about equal. Could lose just as much as we could make, but that's okay. If you feel like I do, that retailers are really going to be hurting over the course of the next month, then this is a good trade to do. So let's take a look at the final one. And actually, the final one we did today, I emailed you, and that's going to be leading into another point that I want to make. Snap, beautiful. Look at that earnings right through those major support levels. When I saw this happen this morning, I posted in the chat room, hey, everybody, let's put this spread on. We're going to sell the April 24th, the options that expire in 2 days. We're going to be selling the 15 put and buying the 1450 put. So I'm going to put that option chain up, and I'm going to click on April 24th. And there's the 15 put, and there is the 1450 put. You can see that that spread is 2 cents bid, offered at 4 cents. We were getting 10 cents, 12 cents, 13 cents for this spread earlier today. Now I got that video, or excuse me, I sent you an email. Everyone should have gotten that email during the course of the day. I know that some of you work. Don't fret. I'm going to keep sending emails as I see new trading opportunities. But we had a really nice pullback in here that took us down to the it was about $15.65 roughly. So we're about 60 cents out of the money. This is a really nice pullback. I know there would have been a chance for you to get that trade done, and that was well after we sent that email, probably an hour and a half after we sent that email. So hopefully you got the instructions. Hopefully you got that trade done, because it's a really nice one. Now, the point that I was going to make is that because we are kind of playing this conservative, if I see anything during the week, and again, I'm relying on post earnings plays as they come out, if I see something, I'm going to put together a very quick email and I'm going to send it out to you. So you'll be able to get your email, put the trade on. So please watch for those emails during the day. I'll try and put them out to you as soon as I can. So let's go in and take a look at a couple of searches that I think you really need to lean on, especially for your swing trades right now. And if I go into the scanner, I'm going to click on bullish. Pop bull is one of my favorite bullish swing trading searches. So in a few minutes, you can click through these stocks. There's Snap, PINS, love it. Look at that breakout through the 100-day moving average. Yes, I think this could be a good bullish put spread. You can see earnings coming out on 5/5, so May 1st, you could do a May 1st bullish put spread, keying off of that 1850 level or that $18 strike. Continue to click down. There's PayPal. Yum looked really good. Facebook. But I don't want to load up on bullish trades right now. I think the market is 50-50 if it goes higher or lower. So, yes, these are all good candidates, but I'm getting a little bit bearish in here. So these are all fantastic plays. You should make sure that you're watching these searches. Strong after earnings. These are going to be incredibly good for us in the next, week to 2 weeks. We're going to hit the earnings season climax next week. So these stocks gapped higher and they've been able to hold the gap. And this is an incredible search to use because it shows you what's happened after the earnings announcement. Oftentimes, it takes a stock a day or 2 or 3 to show its true colors. This is the search that catches those moves. And here's one right here that I think is absolutely beautiful. If Abbott pulls back to that $90 level right in there, yeah, I'm going to be looking to sell maybe a $90, $89 bullish put spread for a 20-cent credit. So this search is one that you want to use. I'm going to go in and use the custom search and go in here and I'll show you option liquidity. We're not going to go too high on this because options are somewhat illiquid right now. But let's say that I'm looking for some bearish trades. I'm going to click bearish on a 4-hour basis, on a D1 basis, and then I'm going to go up and I'm going to look at trade signal and I'm going to say bearish on a 4-hour and daily basis. You'll see these fields are blank because I'm using Option Stalker and not Option Stalker Pro. And if I click on Scan, I'm going to see, wow, there's a whole bunch of candidates here. Now, this next part is really, really important to watch, and it's super powerful. How do I get this list down? Well, let's see. Gee, if I'm looking for any kind of credit spread, then I don't want to be muddling around with earnings announcements. So I'm going to come down and I'm going to click projected earnings date. So I'd like to get at least a couple of expirations under my belt. So there's this Friday, there's the next Friday, and there would be the next Friday, which would be May 8th. So let's make sure that they announce after May 8th, which would put us right here to the 11th. So the earliest that they can announce earnings in the future is May 11th, and then let's go way out. We don't care after that. We just go into June even. Who cares? Let's say June 11th. So now show me stocks that are between those two expiration dates and that have this type of weakness. Well, looky there. There's Ross. That's how I found it. KSS, JWN, ANF. Lots of retailers in here. These are your weak stocks. Any one of these could be an excellent bearish call spread candidate. And let's say that I'd really like to save this search. So I'm going to go in and I'm going to save it and I'm going to name it bearish call spread. You can name it whatever you want, but I better make sure that I title it here and then you can just fill in the blank here, whatever you want to, however you want to describe it. If you're able to use these variables, it's better because then you know when you look at the search, there's a description that'll pop up, but I'm going to click Save and Close. And now, if I go over to my saved searches, I will see it right here. That's how you do it. You find your searches, you create them in the custom search engine, you save them, and then if I can't remember what the heck they are, which happens a lot, I can do a couple of things. I can hover over this and get a description, and it'll give me the description that I posted. If I wasn't very descriptive about it, it's not going to give me a lot of information. But if I click this little box here with a pencil in it, it's going to bring the search up, and then I can see the criteria that were used for it. Actually, I'm not sure why it didn't show up, but it will show up. So I'll have those boxes marked, and then I can change whatever I'd like. Now, in this particular case, since I'm using a forward earnings date, this isn't the best search to save because it's going to keep these same earnings dates. You should keep moving them forward so that you're getting that 2-week perspective. Now, one thing I did want to mention on this that came up that was kind of interesting, and I had to think a little bit about it, was MDT came up on this search that I just ran. And I looked at it and I thought, well, that's in the healthcare sector. Why would MDT be in here? And I started to think about it and I went, okay, well, it's got a major resistance level in here. Yeah, I could definitely see selling a bearish call spread above this horizontal resistance. And yeah, we've got earnings quite a ways off. And I'm thinking, well, these guys make stents and pacemakers. Well, elective surgeries have been postponed because of the coronavirus and everybody that's in the hospitals. And I thought, maybe there's a play here. Maybe this stock is going to have some pretty weak earnings because nobody is buying their medical devices because there aren't any elective surgeries. So that's just food for thought. And I thought I'd put that out there because I'm always trying to rationalize why something might be strong or why something might be weak. But I want to make sure that you look at those searches and use the filter for the earnings date. And then you can also do the same thing. Instead of using it, looking at projected earnings dates, look at your previous earnings date. So if you're doing some searches and you want to make sure again that you're not muddling around with earnings announcements, you can go back and say, all right, well, show me a company that has announced earnings in, let's say, the past, uh, let's say the past month. So now I would just go into March. I would click the March 4th date. So they have announced after March 4th and before April 22nd. Let's go to the 21st, and then I would run my search. I know when I get these search results, every single one of these companies has already posted earnings announcements, so I don't have to worry about that. Now I can put in the other criteria that I'd like to use for my searches, be it heavy volume, whatever your criteria are, relative weakness, relative strength. I know when these stocks come up on these searches, I don't have to worry about that earnings announcement. So that's it for this week, but I wanted to show you those tricks and how to find those stocks and make sure that you go in and check your fundamentals. A lot of fundamentals. I have a proprietary fundamental rating for stocks. You can see the key technical, fundamental ratios that I use: cash per share, debt per share, current assets minus total liabilities divided by the share price. Man, if you ever get a positive number in here, that shows very, very strong balance sheet, your PE ratios. So make sure that you're using this. Also, I've had a lot of questions this week on using a top-down approach. If you like to see where the strongest sectors are and then the strongest groups, this is how you do it. You can see, for instance, if it's technology, you click on technology, then you're able to see which groups have been very, very strong, and you click on that, and then you get the component list on the left. So that's another resource that you can use in Option Stalker. That's it for this week. If you're watching this video on YouTube, please go back and check the trades that I've highlighted in the video. If you like the content, please give it a thumbs up. Please subscribe to the YouTube channel, and then you'll never miss one of these videos. Thanks, everybody. Again, watch for those emails this week. If I see something really good that I like during the course of the week, I will make sure to email you. Thank you. Have a good night. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.